Hi there, welcome to CBD and Essential Oil Talk Radio with Marc and Nikki, where we talk about realistic and fun ways to have a healthy family life and how CBD and essential oils fit right in. Coming up on the show today, well, it's tax season, so we're going to chat with my favorite CPA. She's been doing my taxes for a while, Dee Stone. She works with a lot of small business owners. She's going to give some tips on getting ready for the upcoming tax season and maybe a little bit of extra stuff, too. She's a lot of fun to talk to. What do you got going on, Nikki?
That's awesome. I'm very much looking forward to talking to Dee. So today I'm going to give a recipe on a homemade lip balm that'll keep your lips looking silky soft and add a little plumpness to it. There's a secret ingredient in there.
I don't know if I want my lips looking plump and all that. I guess we'll see.
Come here, let me punch you. They'll look plump.
All right, so we're diffusing Abundance in the Office today, which is an awesome blend of oils. It's one of my favorite fragrances. I mean, whenever Jennifer diffuses that one, I was like, I know it's going to be a money day. Bam!
That's funny.
All right, a quick note for folks out there interested in getting started with a premium CBD oil product. Go with the brand that Nikki and I personally use and trust, Young Living. Text the word CBD to 210-910-4174, and we'll send some information right out to your phone and get you a link. If you're ready to get a kit, you can get a kit and get started. The kit comes with essential oil infused CBD drops and amazing roll-on. Oh, that Calm roll-on is amazing, super popular. It's infused with like lavender, vetiver, and ylang-ylang, super popular oils when it comes to calming everything down. And other essential oils. So, and a powerful muscle rub too. This thing is really, really good. It's got like wintergreen, peppermint, and helichrysum. Yes. Helichrysum, one of my favorite oils.
I love that stuff. I love just to smell it. It smells so good.
Yeah, me too. So text the word CBD to 210-910-4174. We'll send some information right out to your phone. You really can't get any easier than that. And when you purchase the starter kit that we recommend, you also get an exclusive invitation to join our private CBD and essential oil community where you can connect with Nikki and I and continue to learn amazing ways to use these essential oils. All right, Nikki, talk to me.
All right, so the winter weather kind of has my lips feeling a little dry.
Okay.
Right? I even noticed it with Michaela, and it's just the weather, right? We're outside, the wind's blowing, or it's 80 degree one day, 37 the next morning.
No
it's
joke,
like,
right?
What's going on here?
Welcome to Texas.
Right. So I wanted to go ahead and take care of that, but I also want to prep my lips for Valentine's Day that's coming up.
Oh,
yeah. Yes, she did. So this actually has a secret ingredients in it. It's going to plump your lips. So do you have any clue what you could put on your lips?
It's as long as it's not like duck resin or cockroach.
Oh, that's so. Just stop. Just stop. Okay. So this is my homemade lip balm recipe. So it's 1 tablespoon of beeswax pellets, or if you have the big block, you can just grate it. 1 tablespoon. Right. A tablespoon of coconut oil, the solid, not the liquid. 1 tablespoon of shea butter. Now I use organic, and I actually purchased that from Amazon. Then you're gonna do 6 drops of lavender oil. So you can already see how this is really moisturizing and adds out silkiness. But then you're gonna pop in 10 drops of cinnamon oil.
Oh.
Yeah.
Really? It's not hot?
It is hot.
Oh, it gives you a little bit of zap.
You know, some like it hot and some sweat when the heat is on. So
is that a song?
Yes, it is. So anyway, you're going to melt it together like in a double broiler. Some people do this in the microwave. I've done that before. I can't tell a difference. I just kind of melt it 30 seconds, stir it 30 seconds, and then stir it in a glass bowl. And then pour them in your little containers. Now, you can do the little round containers, or you can do like what looks like a lip balm. The word chapstick comes to mind. You know what I'm talking about when I say a tube like that. Yep. It makes 6 of these.
It's like a little push-up.
That's right. And then you just let it sit on the counter, or you can put them in the fridge for 30 minutes or so. And then they're just like a regular lip balm that you would go purchase in the store or from wherever you purchase from.
In 30 minutes, it hardens up.
That's right. It's cinnamon oil.
Okay.
Hey, Valentine's Day, here we come. So yes, the cinnamon oil in that actually gives your lips a sensation of, like, are they burning? Are they stinging? What's going on here? I kind of like it. I'm not quite sure. And then you look in the mirror and you're like, oh, that looks really nice. Oh. Like, it actually gives them a little plumping feelness.
Huh.
So.
Was it like causing them to swell? Like an allergic reaction?
No, it's just that's a hot oil, right?
Yeah,
and maybe peppermint would do the same thing. Peppermint might do the same thing.
Yeah, it might.
But I've noticed the ones I make with the cinnamon, 2 of my daughters say, can you make that cinnamon stuff again? I like the way that felt.
I like it. Okay.
They like it. And it gives them a little bit of, texture is not the word I'm looking for, but a little definition on their upper lips. They like that. Oh, okay. So yeah. So I'll go ahead and I'll put that on our blog at eotalkradio.com/blog. Just look under the DIY recipes there. Right, actually, I already did that because I'm on it. I already did that.
Yeah, you did.
It's on our blog.
Awesome. All right, a quick word from our sponsor for this show. It's going to be the San Antonio Empowerment Council, who has an all-day event coming up with Dr. Peter Minke on Saturday, April 4th. So he is hugely popular
Yes.
in this area. And of course, we're going to be live streaming that event online so folks can get it. And of course, if they can't be there or if they get distracted even during the event, they can get a replay to it as well. And I'm actually going to extend the replay. It's going to be a 90-day replay this go
That's
around.
awesome. I've watched the replay because I was a little busy during the programming.
Yep.
And I just started writing notes. I mean, I was pausing it and I was taking notes. And then I'd listen a little bit more and I'd pause it and I'd take some notes. I love that. That's a huge benefit of that replay. It's huge.
It takes some time, but you focus in on like Marcella, or if you want to learn, because Dallas Harding talked about the farming and stuff like that, which was awesome as well. But Marcella really kind of honed in on some of the products and like timing and why they're good and even how much to take and stuff like that. Just really valuable information that you tend to miss when you're going through all that. So the replay is huge. What did you think about the quality of the audio and the video quality?
I thought
it was replay?
I think you did a fabulous job.
Yeah, it was good. So we're going to have that available for Dr. Nikki as well. He's going to be having, I think, 4 blocks of instruction. We're going to see about getting him to teach on CBD and essential oils and all of that. So I'm super excited about him coming out for that. We're expecting about 400 people for this event, and that's going to be on Saturday, April 4th, all-day event. So, again, if you can't make it, then get the online version of it. And, of course, you can get the digital replay as well. You can get all that information at saecevents.com. All right, so we're going to talk to Dee Stone. She is a CPA and an experienced tax strategist for small to mid-sized businesses and the author of What Can I Deduct? It's a 4-book series. She holds her bachelor's and master's degree in accounting and has a diverse background in both public and corporate accounting, super important. Before starting her firm in 2006, so she's been doing this a long time, Dee worked actually for the IRS.
Oh, dun, dun, dun.
as an auditor in the small business self-employed division here in Dallas, Texas. She now navigates tax laws to create money-saving strategies for business owners. She has a passion for educating folks. We've been working with her for a while, and she's awesome. And she frequently speaks to groups of independent commission salespeople, including realtors, insurance agents, and independent distributors like yourself and me. So, Dee, can you hear me? Welcome to the show.
Yeah, thank you.
Yes, welcome. Excited to have you here.
It's a great time of the year.
I'm going to try out that lip balm later.
Yeah, you got to. It's awesome. It
really I was surprised by the cinnamon, actually, but yeah.
But it makes sense, right? You think about it.
Mm-hmm. They have Young Living has a deodorant with cinnamon in it, too.
Oh.
So I'm not really sure what that deal is. But actually, I think that's the one I use. No, it works just fine. So tax season's coming up. It's January. Actually, when this show airs, probably like right around the first week of February or so. So what are some tax strategy tips that small business owners like ourselves, maybe independent distributors? We get a lot of essential oil users and distributors that watch and listen to this show. So give us a couple of tips with respect to the tax law changes that we should be aware of. Let's kind of start there and we kind of dig in just a little bit from there.
There's not a ton of things that changed for the 2019 filing year. Most of those changes took place, last year with 2018 when we had that major overhaul that took away the entertainment deduction, which was really the key thing that got taken away for business owners. So used to we could have meals and entertainment, and now we can still have meals, and there's still a little bit of confusion around that, but you can have meals if it's for a business purpose. You have to be meeting with another person, not your spouse only. If you're traveling, you can deduct the meals, and you can go to an entertainment venue for business purposes. So, for example, if you go to a basketball game, you can take somebody. You just can't write off the tickets to the game. You can still write off the food that you consume at that event, though. The only rule with that is it has to be paid for separately than the tickets. So that's really the big thing that hits business owners. Now, I know in the direct selling space, we have a lot of people that maybe aren't focusing on it as a business. So they're hit again this year with not being able to take deductions for hobby expenses. So they claim their income, but they don't have any offsetting deductions for that. And then one that may apply to anybody is they have new rules this year for people who use or dabble in the exchange of cryptocurrencies. And so you'll see on on the tax return, there's a check the box that says, did you buy, sell, or trade any form of cryptocurrency? And
Yeah.
So is that like Bitcoin?
Yeah.
it is. There's
Oh.
Bitcoin or Ethereum. There's like a whole ton of different ones out there now. But you have to be real careful to answer that honestly, because I like to call this the IRS's lie detector test for future prosecution.
Oh.
If you have some and you haven't done any with it, that's fine. Still say yes, because it says, did you buy, sell, trade, or exchange any of that? And basically, if you say no and you know that you did and you were to get audited for that, or something comes to their attention later on down the road, it's a worse offense to have perjured yourself on that form. So
Ooh.
you just want to be real careful.
What's the statute of limitations on that?
6 years usually.
That's a long time in tax money, or in tax years.
Yes,
Tax
it is.
Okay, so back to the food deductions. Actually, before I get to that, you said on the hobby deductions. So can you just clarify for me what I guess identifies what you're doing as a hobby versus a business?
So it would be a hobby if you're not consistently kind of working in it. And by consistently, I mean, like, you're doing a little bit here and there. It doesn't have to be every day, but it should at least be every week. But, if you think you're going to work a direct selling or really any kind of activity, and you're going to pick it up 1 month for a couple of weeks and run hard, and then you're going to put it down for 5 or 6 months and then try it again, you really have a hobby. So
Gotcha.
A business is something that you're, working on consistently throughout the year.
Cool, like having a podcast every week. So yeah, we should be good there.
Yes.
Okay, so when it comes to the food, now I understand the entertainment's separate, right? Can't do that like a basketball game, so forth. But when it comes to the food, I've heard a rumor that if your meal is less than $75, you do not have to keep a receipt. Is there any truth to that?
That is absolutely correct.
Oh, nice.
It's interesting because meals are one of the most audited categories on a tax return, and they now require the least amount of documentation. So that was a government plan, right?
Yeah, I was going to say, it sounds like a trap.
Yes, you do have to keep notes. So I would encourage, if you have business meals that you're not keeping the receipts for, that you just have a note on your calendar. Hey, had dinner with Marc and Nikki to talk about the podcast on, January 26th, and the transaction should be on your bank or credit card to show the amount, and you're good.
Oh, okay. So you can't be like, well, every meal I have is $74. I don't know why that is, but I'm just an expensive eater. I'm just teasing.
No.
Don't come and visit me in jail. No, I'm just kidding.
There you go.
Okay. All right. Nikki, did you have a question?
I do. I have 97 questions. So let's get started. All right. So, Dee Dee, I have 2 businesses that I work out of my home. So I have a Young Living business and I also have a real estate business. My question is on office space. Can I deduct both of those spaces?
If you have 2 separate and distinct spaces, then yes, you can. And you would deduct the one for Young Living on your Young Living Schedule C, and you would deduct the one for the real estate on your real estate Schedule C. Now, if you use one office space for both activities, you can only deduct it once. And in that scenario, I would say pick the one that generates the most revenue for you in that year.
Oh, nice. Okay.
I had no idea on that.
Yeah.
Really, because so if my dining room is one workspace, actually dining room is probably not the best choice because you use it for lots of different things, but say a bedroom is,
It could be.
then I could like kick my daughter out of her bedroom and have her sleep in the hallway, and I could use that as a second space. I'm just thinking out loud. I'm soundboarding.
But it's like you can write off that. How does that work exactly? So let's say my room is 300 square feet. I can write off 20% of 300 square feet. Is that right? Or is it?
If that's the space that you use for business. So a lot of people get bad information on home office deduction. So one of our books is a mini book that goes into all the details on how you figure that. But the law says you can deduct the space used regularly and exclusively for business. So if your room is 300 square feet and you only use like a 10 by 10 space in there, so 100 square feet of that space for business, then you could deduct, that percentage of the room. So in that case, it'd be 33% of that room. But it's your overall square footage of your whole house.
And that includes things like your electricity, mortgage. No, doesn't it?
Mortgage interest, property tax, homeowners insurance, HOA dues, utilities, and then repairs and maintenance. But those get a little tricky because you can't like paint your daughter's bedroom and put that on for your home office. It would have to be, like painting the outside of your home, something of that nature that was relevant to the whole house. Or you can have repairs and maintenance that are direct to the home office space.
Oh,
And
nice.
I'll just tell you, when I hire myself to do this stuff, I'm very expensive.
Very
And you
expensive.
can't write off your own labor.
I can't?
No.
I can't?
No.
Oh.
No.
So,
All
and
these
and you
rules.
can't write off landscaping, is that right? I mean, that's part of my house.
You
People are
cannot
coming to
write
my
off
office.
landscaping.
Nope.
Dang it.
That's funny.
No
right?
landscaping.
What about new clothes?
New clothes, absolutely not. So,
Oh, really? I would have thought you
I
could.
like
Right. We're listening.
I like to joke about this a little bit. So,
Okay, good.
a lot of people want to take their clothes and say, well, I had a uniform. So the IRS, I don't know, I guess they were funny or drunk that day that they wrote this guide, but they have an example in there that says if a painter is required to wear all white, that is not distinctive enough to make it a uniform that he could deduct. So, I mean, I don't know anybody that wants to walk around as a white Power Ranger all day, but the IRS seems to think that that's not, distinct enough to make that a uniform, because you could wear that all white clothing out in public all the time. So the rules for clothing are, it has to be required by your employer, and it can't be something that you would wear for anything else. So I know a lot of time at convention when they have the gala, ladies are like, I'm writing off my dress because I would never wear this anywhere else. But it's not would you wear it, it's could you wear it
Oh.
Yeah.
anywhere else.
To a funeral.
Yeah. So like when I was a police officer, so we had police uniforms. I mean, those are specific to work. But if you did like a polo and you had a brand on it, like your logo, but it's like a black polo shirt and you wanted to put, CBD and Essential Talk Radio on it, whatever, that would be something that probably would not qualify, correct?
That's marketing, right?
That would not really certainly doesn't qualify under uniforms because you're not required to have one. Sometimes we'll get those in under advertising, but I do caution people if you're not in that space where you're showing a ton of profit yet, that's number one, probably not what you should be spending your money on, but from a business perspective.
Right.
But number two, it's probably going to stand out. So I would wait till you're making a little more money off of that, and then you could put it under advertising. But if you do that, you need to have that well documented. Social media is an excellent way to document things that we need to see visually. So if you're fixing to host a podcast, you have the video piece that you're putting on your social that people can see your CBD polo shirt, or if you're doing a Facebook Live or your Instagram post, just make sure that you have documentation that you're actually doing events where you're wearing this gear to advertise your business.
Cool. Well, let's talk a little bit about getting audited. So, what if? Because we were talking about earlier about tax prep and all that kind of stuff,
Mm-hmm.
and you were saying what can happen when you get audited and how it can actually have a little bit of a chain reaction effect with respect to someone in your line of business. So, give us some caveats there as far as why people really need to be careful about what they're deducting and all of this, because it's just really not a good idea to
Right,
be.
or what shows up as a red flag to the IRS.
Yes. So let's talk a little bit about that.
So first we'll talk about the things that show up as a red flag to the IRS, right? So basically they take your return and they scan it in. The industry code that you choose is really important. So for like direct selling, that code is 454390. And what that code is actually asking for is, how do you want to be classified for averaging purposes? So there are different categories of average expenses by industry. And when they run those through the computer, it can get kicked out for usually a correspondence audit first through the mail to say that something stood out as way above the industry average. So, if you're in the direct selling space, you probably shouldn't have $30,000 in auto expenses for the most part, because it's not a space that you need to drive a lot, unlike maybe, say, a realtor who would drive a lot. So if that number comes back really high for the industry, it's going to kick that out. Also, if you have any number that stands out on your Schedule C that is disproportionately higher than the rest of them. So I see a lot of people try to do this with travel, for example. So I made $5,000 in commission, and my travel expense I have down as $10,000. Well, that stands out substantially. So that may flag it for an audit as well. So things like that will flag you. And then one of the things that the IRS has been focused on really for about the past 5 years is they finally learned that if they go after preparers that give bad information, they can make more money.
Oh.
So, I hear a lot of people come to me and they're like, well, I mean, my last guy said I could write off X, Y, and Z. And I'll be like, that's great, but here's where the tax law says that you can't actually do that. So, we kind of work on that, because if I'm doing that for all my clients, writing off, let's say, Nikki's landscaping, if I'm writing all that stuff off.
I think he did.
and you get audited, I mean, that sucks for you because you have to pay the tax on that, right? But what really sucks there is that they can then go and pull a few more returns that I have prepared to see if they have the same erroneous deductions. And if they make that adjustment on a few, well, then they can just pull every client that I've ever prepared the return for, and they go and they get my 400 clients, plus they get to penalize me $10,000 per return. So if I have 400 clients, I do something for one guy, I probably do it for all of them. You all get to pay tax on that bad information that I gave you, and then I get to pay $4 million in penalties.
And your career's over.
Yeah, pretty much.
Pretty much.
Wowzer.
Wow.
How far back? So I got two questions, but I'm going to do this one first. How far back can they go on this type of thing with somebody if they catch an error? How many people does it take to trigger this $10,000 fine?
It varies. I think, they've had several cases, and I try to post those to my Facebook page. They've had several cases lately where, the ones that make the news, they're talking hundreds of clients, but that doesn't mean those are the only ones that are getting fined. Right. Those are the ones that they're trying to make an example of that are getting jail time, or their practices got completely shut down, things like that. There was a guy who did Mariners out of California, and they had warned him like 5 or 6 times, and he kept doing it. And so I can't remember now what the penalties were, but they were millions of dollars. Ooh. When they went after him. Yeah.
Okay, and then the other question I had was on, for an audit, how far back can the IRS go on an audit? How many years on a regular person?
Generally, they can go back 3 years unless they suspect you of fraud. So remember that little lie detector test I told you about? On fraud stuff, they can go back 6 years. Now, the other thing with that is that time limit doesn't start until you file a return. So if you've never filed a return for that year, there is no statute of limitations. So we work with, life happens. It happens to the best of us. And we work a lot with people who are behind, and we get them caught up, and we get them on a plan so that they're compliant. So we're working on about 4 of those right now. One hasn't filed in 9 years. Yeah.
Oops,
so
I forgot about that.
Yeah,
Were they
it's
over
really
in Afghanistan
important to
or
get
what?
that. No, it's really important to get that clock rolling. People just have things that come up in life, whether it's, sometimes it's related to avoidance. Sometimes it's they got bad advice. So I've had people come to me with that situation where their preparer has told them, if you can't pay your taxes, don't file it until you can pay. That's horrible advice. But we've gotten doctors who have done that. They haven't filed for 4 or 5 years because that's advice they were given from a CPA. We have people who've had deaths in their family that has just completely debilitated them in a lot of ways. Medical issues, just a variety of things that can make people, and once you don't file once, like you kind of just have this fear of what's going to happen when you do it. And sometimes it's paralyzing.
Yeah, because of the penalties and stuff, right?
Yeah.
Yeah, ouch.
Yeah. Wow. Okay, well, I only have 90 more questions for you, so I'll make it quick.
Oh my God.
You mentioned about write-offs and magnets on your car earlier. Is that a bonus at tax time for us, having magnets on the car?
It is not. So that is kind of a big myth. So
Okay.
lots of people hear things like, oh, well, if I stick a magnet on my car or have the window sticker for my business, all my miles can be deducted as advertising. That is not true. Putting an advertisement on your car does not change the use of the vehicle. So you can deduct the cost of the advertising, and you still have to track miles, and it's, the miles that are driven from your home office, or if you office out of a regular office, to your business destination and back. And you still have to track that.
Okay. 5 most common write-offs.
5 most common write-offs, any industry?
Let's go
let's
with
stick with
marketing. Network marketing.
Let's go. Okay. So I would say definitely should be product. So not all your product, but you should really have a big focus on product. So I know for specifically Young Living people, there are lots of new products coming out, and you should definitely be buying those to try them out and writing those off.
All right, hang on. Wait.
I have to write off all the CBD.
Okay, I have a serious question here because so in order to we're in the business, right? So we have to spend at least $100 on product. Okay, so let's say that this is not new product, right? I understand what you're saying on new product, but it's not new product. But and I just heard this from a big name in Young Living, but I want to say that you had told me different, so I just want to clarify on this. But the $100 that you're required to spend in order to get all your compensation from Young Living, is that something you can write off that $100?
No.
Okay, that's what I thought. Why?
You can write it off if the product was purchased for business. So there are lots of ways that you can write off your product, not just the new product, but if you're hosting classes, you can write that off. If you're giving samples or promotions for your team, or you're giving out bottles for Rank Up, you can put that under team development. So, you should be spending more than $100 a month on product for your business, so that question is irrelevant. But the reason you can't is there are some months where, people are going, well, I have to spend $100 to get a paycheck, but maybe their paycheck that month is only $50. If I spend $100 to make $50, the IRS can always do math in their favor. So there's that. But also, that's just bad business, right? So, and the tax code in no less than 3 places says you can't write off personal use products. So if all of that $100 worth of product is for personal use, then you can't write it off. Now, that's not true for all direct selling companies, because some are structured differently. So there's a company based here in Frisco that if you don't spend 100 PV a month, right now we have pre-IPO shares. So when you bought the shares, or whenever you bought in, you earned shares for your buy-in. And if you don't spend 100 PV a month, you lose your shares.
Oh.
Now, that's completely different. So you have to spend 100 PV to keep your shares and stay active. So if the requirement was to stay a distributor, you had to spend 100 PV, then yes, you could write it off. But to get your full commission, the rules are different.
Yeah, and that's pretty much
because
how
you have
it
to
is.
do that math. Yeah.
So, but if somebody was making, let's say, $10,000, that's their check, and
Oh, yeah.
then they're required to spend $100. Can they write that full? Whether it's now, because there's a bit of a 2 things going on here. Because if it's all personal use, right? They're not doing. Let's say they're not doing anything with that product other than just it's toothpaste and inks you red or whatever, and they're using it for themselves. So it doesn't fit the personal use category, but they get a $10,000 paycheck by spending that $100. Can they write that $100 off or not?
Yes.
Okay, because it's the dollar amount.
Yes.
Okay, so but you got to be careful if you've got a low paycheck, especially less than $100 I'm getting.
Yes.
Okay, cool.
Absolutely.
Well, that's a great clarification point. I feel like I just did a great service to all my listeners.
Thank you.
I think you did.
All right, let me get back to me.
All right,
I forgot where I was.
we got about 3 minutes.
All right, so common myths, and we talked about clothes, landscaping, stuff like that. But what are people forgetting to write off? Like what are something they can actually write off that most people forget?
I think a lot of people, I don't know that it's because they forget, but I think a lot of people miss out on mileage because they just don't want to track it. So they miss out on that, and that can be huge. I see a lot of self-employed people forget that they can take their health insurance deduction, and that's the health insurance. Like if you're only income is from a self-employed source, so no W-2 job where your employer offers health insurance, then you can write off your health insurance premiums, and that's for you and your family, not just for yourself. Those go on the 1040, but you still can write them off. And then I guess a really big one is the commission or the fee that you're charged on your commission. So those are usually pretty small fees, but the things that are taken out of your check that you may not realize. So you can take those off as well. And then cell phone and home internet. I see these missed a lot because they'll be on somebody's plan. So particularly with your cell phone, I would say unless you're on a plan that gets a substantial discount through your employer, I would make yours the primary number. So, for example, like if my plan's $199 a month, and I have myself and 2 kids on there, I want my number to be the primary line at the $199 because I'm going to take the business use percentage of that. I don't want to be that $9.99 add-a-line, so that I can take more. And then home internet, a lot of people will skip it because it's bundled with their cable. If you just call and find out how much the internet is, and you take 50% of the home internet straight on the Schedule C, not under the home office, then you'll get a much better deduction that way.
Oh, sweet. All right. And last but not least,
this is why I love Dee Dee's time.
There's an app. Is there an app out there that people can use or you could suggest that would help them with tax stuff? That's so it's not so scary.
Right. Overwhelming.
Absolutely. So TaxSpot, and if you're a Young Living distributor, if you go into your virtual office, they have a deal with TaxSpot where you can get that for 50% off if you sign up through your VO. And it will connect to your business bank account that you have separate from your personal account and your business credit card, and then you can just categorize them right in the app. It'll bring in all the transactions. You just choose the expense category, and you're set. And it will even track your miles, and you can take pictures of your receipts so that you don't have to keep the paper.
Oh, you're awesome.
I think it's like $5 a month.
Oh, yeah. Why wouldn't
if you're in Young Living.
Sweet.
Yeah.
All right.
Just to clarify, you said $5 a month?
Somewhere.
I believe it's $5 a month if you're part of Young Living and you sign up through your virtual office.
Awesome. All right, Dee Dee, we're going to have to wrap up. Is there anything you wanted to add to our conversation that you felt like maybe we missed and that folks should know out there? And then also, how do they connect with you?
Okay, so I think an important thing to add here is 1099s. Okay, so lots of people are getting antsy. They're required to be postmarked on or before January 31st, so you may not see them in your mailbox until Valentine's Day, so we love you too. You will not get one if you made less than $600, but you're still required to report your income. And then probably equally important is if you have a check mark in box 9 and no numbers on there, it is okay. Lots of people freak out about that. There's nothing to do with that. They're just saying that you love your stuff so much you bought more than $5,000 throughout the year, and they're required to fill that out. But there's nothing for you to do unless you resold the product. And then to connect with me, you just go to my website, ddstone.com, or call the office at 469-583-0633.
Perfect. And your book series is on your website where we can go and purchase those?
It is, and it'll walk you through all the things you can write off for your essential oil business, and there's a budget planner if you want to be like ready to go for 2020.
Awesome.
Awesome.
Well, thank you so much. Learned a lot today.
Yeah, thank you, Dee Dee. That was awesome and very informative, and that's why we have Dee Dee Stone as our CPA because she's no nonsense, right? She'll give you the straight answer. So we appreciate that, Dee Dee.
Thank you, guys.
Have a great week, and we'll talk to you again soon.
You too. Bye-bye.
Right, bye-bye. Wow, lots of amazing information.
It was good, right?
Yes, this is so helpful. This is the part of the job that I love when we're just really, really helping people. I mean, there's lots of recipes I do. People like, I want a recipe for this. I want a recipe for that. Or, Mark, can you give me some more information on CBD? But this is the stuff that's like, okay, this is going to make a huge difference in a lot of business people's lives.
Yeah, it's some of that stuff that, well, I heard rumor and I'm not really sure and I don't have a CPA, so I don't know what to ask, or you know what I mean, stuff like that. I'll just Google it and you get all kind of crazy answers on Google, so that's not necessarily the best thing to do. But anyway, so I hope you guys found that informative. If you did, hey, share it with somebody else who can get that information and get a hold of Dee Dee Stone. ddstone.com or call her office. She's fantastic. We've been using her for a few years now and love it. So,
And she does have a Facebook page also, DD
yes,
Stone.
she does.
And she puts out some amazing content to help, very helpful content.
Yeah.
Yeah.
Keeping an eye on those IRS people. I don't know. I don't want to go to prison.
I don't either. Not again.
All right, a quick reminder, if you're looking to add high-quality essential oils to your home, trust a company that Nikki and I personally use and recommend, Young Living Essential Oils. It is a farming company that oversees the entire essential oil process, from farming the plants, distilling the oils, testing, bottling, delivery, and world-class customer service. So if you're interested in learning more about essential oils and the company that we trust, text the word oils to 210-910-4174, and we'll send that information right out to your phone. All right, as we wrap up the show, quick reminder to check out our latest podcast on all the usual podcast platforms, and be sure you're following us on Facebook, Instagram, and YouTube, where we post videos of our show. There are links to everything you need to know in the details below, or you can check out our website at eotalkradio.com. That's going to be it for us. Have a great week, and we'll see you on the next show.
All right. Bye, guys.